Hey everyone, good afternoon, good afternoon. Sorry it took a little longer to get everything started and set up here. We've got we've got a bunch of kids and everything running around for a play date today, so got to make sure that it's nice and quiet so you don't have too much screaming in the background. Welcome, welcome. Hopefully everyone had a great morning of trading. It was slow. It was definitely pretty slow today. I would be surprised if a lot of people weren't saying that they had a hard time today or maybe no trades, etc. It definitely was not an easy one. Before we jump in, as always, make sure to swing on over to Slingshot Futures, scroll down and click on the Join the Daily Outlook newsletter. From there, you're going to be able to register for our newsletter Outlook email. You'll be notified every time one of these videos comes out. Along with that, in the video itself, or in the email itself, rather, we go over everything from stocks, options, crypto, you name it. If it's moving, it'll show up in there at some point. So you make sure to sign up for those so you don't miss that ever again. Of course, along with that, go over to the live stream subscription and trial info where you can register for a free 3-day trial in the room. You can hang out with us for a couple days, see what it's all about, and generally just see how we approach the markets. Even when they are really slow, there's still usually a lot of good things to talk about and cover. So make sure to sign up for that if you haven't done so already. Now, looking at the chart, starting off on the euro had a pretty good rally to the upside. We broke above resistance at 24.010. It was holding as resistance for a good amount of time, right? We had resistance here, tested it again here, and overall a little over a day worth of resistance that came in there before it broke out to the upside. Heavy bullishness on this breakout, and this is a stereotypical breakout that you really want to see. You have that level of support or resistance coming into play, and you have the candle breakout point, which is about halfway into the candle. It's a really great place to look for potential, at least to find some bouncing there. Well, just an area of interest, a good breakout, and a lot of times when the market comes back to that kind of breakout point, they love retesting it as support. So that's kind of the next best thing to look for here. But the euro is rallying higher. We've broken through multiple levels of resistance, and we're now retesting the 618, so we can get rid of these levels of resistance here. This is attempting to create a new level of support, but it has a decent amount to go before that's actually confirmed. These highs coming across here are kind of irrelevant at this point in time. So really what we're left with is just kind of cycling off the lows of the range, right? The buyers came in below the lows of the range. We pumped down just a little bit, trying to challenge some of these earlier levels, ran into support and reversed back up again. Buyers are buying into this next pullback after the sellers have failed. Now we have a good shot at the upside objectives, pushing in towards, 24,855 is the next area of interest for buyers to go towards. But at the same time, the 786 is right around that same area. And if they can get a little bit more, breaking through some of these levels of resistance back up towards these highs where the major levels of resistance came in the first place would be the next objective. And I would love to see some buyers to push the market up towards that area. Now, in terms of the overall upside objectives, the next best one is going to be a break above the previous swing high. And that is going to be an area of interest for a couple reasons. That would be you have that initial rally higher with a lot of aggression, and usually on that next pullback, you end up seeing buyers buying into swing lows, buying into the bottom of bear candles, buying above bull bars, etc. And where is their primary objective? Their primary objective is back to the high closes, to the highs, and that means that we're in a profit-taking area where a lot of traders are probably taking profit. It makes a lot of sense here, and that would explain why we're getting a pretty big bear wick here. Now, the upside objectives past that, if we can start breaking through that, then we start going up towards the next levels of resistance at 24,855 up to the 786 for a test there. Plenty of different options to try to catch some more bullish momentum to the upside if it's able to kick off and get going. Either way, though, the euro is looking pretty good. We're running into resistance, and as long as this resistance is still holding at 61.8, which is that 24,475 or 80, depending on how you want to round, as long as that maintains its strength there, the buyer's going to have a really hard time because, again, we're in a profit-taking area. If we can start breaking out above those highs, then we have a pretty good shot at maybe getting a little bit more juice to the upside towards 855. Looking over on gold, gold has had a really wide bull channel, It's having a hard time doing much else other than just kind of grinding around inside of here. And we can see if we look at today's price action, it was an absolute train wreck. I mean, a new low, new high, new low, new high, it's just bouncing all over the place. So gold right now, to me, is stuck smack in the middle of a range, and it's going to be really hard to get anything working in here while it's stuck. We can use some of this historical price action here to give us an idea of where, maybe some major support inside of this range is. If we look here, Make this a thickness of 5, easier to see. We can see that, well, the buyers are utilizing this area as support. This was earlier as support and resistance, resistance, resistance. Didn't do much here, but support, resistance, resistance, resistance for quite a while before it broke up. And it started getting a little bit choppy in there, but we can see price is still respecting this area. So out of everything, you know, 46.6 is going to be an area of interest while we're stuck inside this range, and that's going to be kind of the area that we're looking for potential bouncing. Outside of that, though, we're stuck smack inside of a range, back and forth, lots of chop and slop, and it's going to have a hard time really getting anything done. So for the most part, sitting on hands, looking to buy low, sell high, emphasis still on buy low, but for the most part, it's kind of letting the market do its thing. Over on crude oil, we are pulling back, still looking for that test of 66. We have a big level of support or resistance chopping around here, the same place that we had a bunch of swing lows, swing highs, etc. But more notably, this is also the swing low that they put in before that attempted break up to the highs, which failed perfectly. Mind you, that's exactly what we were looking for that failure off of the highs. I would like to see them come back to this area as support at 66 to see if we can find a bounce off of that. It is a round number. It's not like a 65 or a 60 or something like that, but it is still a round number, and a lot of, lately especially, crude oil's been finding a lot of support and resistance around any round number. 62, 63, 67, doesn't matter. It seems like they are treating them all with the equal amount of support or resistance. So just kind of keeping an eye on that area. New level of resistance at the high, 67.52. Level of support and objective area of interest at 66. If we can get a dip down there to try to push the market back up a little ways, maybe back towards around 67, about a $1 pop off that 66. I would especially like to see a little trap before that turn higher. Of course, it does have to be said that we are in that perfect bull channel to the upside. Perfect in the sense that we have perfect tests all over the place, and we're cycling off of the highs. So a lot of profit taking coming off, and the likelihood is that eventually we're going to migrate back down to the lows of these channels. So that's kind of what we're looking for right now in the longer term, right? In the longer term. In the shorter term, though, looking for a bounce off of sub 66 for a trap, and then a punch back up for maybe, you know, 50 cents to $1 or so on crude. Over on the S&P. Still wedging, still stuck, still not doing a whole lot, really. Today's price action on the S&P was, I think, lackluster as being nice. Very slow today on the S&P. We are more recently getting a nice bull breakout, trying to catch some lift to the upside, but for the most part, we're stuck. All of the index markets are kind of seeing the same thing. The S&P is getting a rally to the upside here towards the end of the day. The Dow is as well, and the NASDAQ is also. The NASDAQ's probably the worst out of the bunch. But, you know, the S&P is still in a major area of sell-side activity. The first time we tested the sell zone, it pumped all the way back down to major support. We're now trying to get a breakout move to the upside, and we're testing next levels of support, and that's going to be at 87.25. So the likely objective short-term off 87.25 is back to 79.5. And if we can get a little bit more bearish momentum, this could potentially start looking like it might be putting in a top. Now, we don't have enough information to really call that yet, but this is a pretty strong blow-off candle, and if it closes strong like this in the next, 45 minutes or so, that would be a potential exhaustive move. You have an extended trend that's been going on for a while, nice pullbacks, nice healthy move, and then you get this that's usually more towards the end of a trend. You don't want to see that big bull leg at the end of a move. You want to see it down here so it shows good continuation. So a little bit nervous on this move up, thinking that we might be more on the sell side, and we are rallying in towards a sell zone on top of that. Makes a lot of sense for sellers to be building into long-term positions here to try to drive the market down back towards 56 or so is the next objective, kind of coming back to this cluster of support, and then after that seeing if they can drive down to fill in the big gap down to 26.05. So everything is looking pretty strong there. It's just a matter of whether or not they want to hold this as exhaustion, if it wants to close nice and strong, or if it ends up finding a little bit of failure. That's really more so what we have to wait for. And then, of course, the bonds. We can't forget about the bonds. We had that kind of back and forth movement going into the end of the week where it got a little bit choppy. We did have a breakdown, but a little bit of a kink in the problem here. They missed that support by like a tick. They just missed it. Really close shave on that support. So unfortunately, they didn't actually physically test that support level, which was what I wanted to see. But we did get a round off into that move back up and filled the gap. The gap that they left behind from the weekend, that was at 145.16. That gap was filled in on this most recent bull bar here. Got about 45 minutes left on this candle, but they did fill in that gap. And, you know, it's just one of those instances where you have a beautiful level of support and they front ran it a little bit. That happens. You know, these zones, especially in a 4-hour chart, are more like blocks. The same thing goes for over here. You could consider this hold over here a hold off of that support at 144, you know, 625 or so. It's just, in this case, well, they came really, really close, but just buzzed it, missed it, and popped back up again. We'll have to wait until the next one. The next area of support is going to be down at a 3-push wedge bottom, and preferably, if we can get this to take a little while, I would like to see it kind of take its time and then pop down, because that would give us rising support, that would give us falling support, and that would give us horizontal support all in the same place, creating an area of interest. Now, is that going to happen? It's tough to say, because honestly, the market would have to do nothing for a good day and a half, 2 days. It is the bonds. It is definitely possible, but chances are not likely that that's going to happen. I would love to see that dip down a little bit later to get that area, but, you know, that said, even if it fell down right now, you do still have falling resistance and horizontal support. You're lacking the rising support, but if it's a, you know, a quick snap lower, you might get it anyway. So down below, a new low is going to be an area of interest, and fortunately, that creates a same zone at 144.625. So that's going to be kind of what I'm looking for here on the bonds, with a quick snap down to a new low, maybe a blow-off low, so we can pick up that next level of support at 144.40. It's around 144.14 or so. Those 30-second decimals drive me nuts. But that's kind of the scenario here that we're looking for. We filled the gap, we're cycling off the highs, we blew off the top here, they retested the inside and held. Now we're looking for them to do the same down here. The long-term objective is a deep correction down to 143.24 or so, but we've got a little ways to go before something like that happens. So we'll give that a little more time to kind of come to fruition. Kind of a bummer that they missed it by a tick, but it does happen from time to time. Over on the stock side of things, looking through some of the different markets that we have available here, you know, one of the big ones that we've been following for a while is Twitter. Twitter finding that sympathy kind of bouncing back and forth and just having a little bit of a hard time. On a daily chart, we can see that they did fill that gap. It held beautifully, acting as support. Now we're coming back to the bottom of this big bear bar, right? This was kind of the bracket zone that we had going over here. We have an equidistant break off on the highs to the lows. That worked out beautifully. It was also on top of that gap fill. But now we're holding it as resistance. And this is where the buyers either need to show up or get out of the way. Because if they can't get this back above as support, then there is a very good chance that this ends up falling a little bit lower and filling the next area of support, which is going to be at 25.24. So a little bit of a shaky ground that we have going on here for Twitter. They definitely have a little bit of proof to go, but, you know, for the most part, it's not really that bad. It's just kind of, again, I think Twitter is more of a sympathy fall compared to some of the other ones, like Facebook is an example. Facebook is also catching a little bit of a rally higher, so they do seem to be fairly correlated with one another in that regard. It's just the big thing with Twitter, you know, we're holding this level as resistance. That's not what a lot of buyers want to see, and that could cause some problems if the buyers can't get it back over 29.71. Tesla is another one, TSLA, getting a little bit of back and forth chop and slop here as the SMI goes into a little bit of an overextended move to the upside. We're seeing somewhat of a kind of a pennant formation, a little bit of a ledge. I mean, this could be a spike, ledge, and failure all the way back down again. But the way that this is looking right now, they're holding, or at least trying to hold above support at 295. This 295 area is a little bit more of a zone because we do have this open gap down here that needs to be filled in. So it wouldn't necessarily hurt to kind of see a snap down, fill that gap, and then a pop higher on that pennant breakout. It would actually look pretty nice for continuation to the upside. So everything looks pretty good here on Tesla. It's just a matter of whether or not they can get more continuation to the upside to kind of finish the move off, or if we're going to run into a situation where, you know, this ends up being a spike, a ledge, a strong breakdown, and more sellers pile in to crap the market back down again. If that is the case, and we have the next level of support kind of back down towards these lows at around 250, but we are a ways away from that at the moment. Either way, the area that we were looking at before, around 260, has pushed up about 40 bucks from there, put in a high of right around 309, so a really good bounce off that area. Now it's just up to the buyers and sellers to see what they want to do here. Is this a spike and ledge failure and it crashes down, or is this going to be a spike and pennant with continuation to the upside? Spike and pennant puts targets at around 350. Spike and ledge puts targets down at around 250. So we're talking like $100 range between these two here, depending on how they want to cycle out. Let's see here. What were some other ones that we were looking at? We're looking at corn on a daily chart. I remember that, ZC. Corn is kind of, you know, this was that problem when they gapped all the way back down again, tried to rally higher. They're a little bit exhausted. Buying pressure likely coming in at around 82. But, you know, for the most part, they might need to cycle even further down to retest 373 3/4. I think the big problem, what really kind of halted this big rally to the upside, was the fact that we closed here and then opened way the heck down here on this big old gap. That caused a lot of problems. And traders that put all of their effort forward on getting this bull bar to close strong had to redo it again on the next one. They're just out of steam, so the market has to pull back a little bit. Wouldn't be a surprise to see some support coming in around, again, that 382 area as an area of interest. Of course, some other ones that were popping up on the list. MasterCard, we were talking about wanting to see that strong bull bar. It did trigger in the next one. It hasn't broken down through the lows, but man alive, it certainly is not the good follow-through that we wanted to see. I want to see a lift up towards those highs again, and so far we're just not getting it. They're just kind of sliding along the bottom of this wedge and having a little bit of a hard time here. So one thing that might be worth considering is that this might just be a channel. Right, redraw this as a channel and pop it on the lows. We might be looking for a next retest of support on a quick dip down. It certainly doesn't look very healthy for an upswing, so kind of guarding a little bit and saying, okay, well, if the upswing looks bad, probably going to get a pullback to test support again, and that would be right around that same area where we've seen a lot of support come in already at these lows. And if we can combine that with a potential channel low, we have an ABC type channel where the D point has yet to be tested, and that would be a nice bounce back to the upside. So MasterCard, you know, it was looking really, really nice on this bull lift. It didn't follow through very well. And now it's just a matter of, do the buyers want to maintain their strength above and keep pushing, or are they going to wait for the next level of support pullback, which looks a little bit more likely right now. Boeing was another one that, you know, recycling off the lows of the kind of channel down here. They gapped underneath it and popped back up. This is definitely an area that I want to keep an eye on Boeing, is for the market to come back and retest this as support. That's going to be at 317.39. You know, again, this previous swing low obviously acted as a lot of support. Buyers buying into the lows. They gapped underneath it, and as soon as that happened, it went ripping higher. But I would like to see an inside test of that 317.39 to catch another bounce back up. See if they can push back towards 340s, maybe even 350s. Of course, I would love to see 370s and 80s, but you know, first things first, got to hit the other levels of resistance before we start going flying higher. That's really about it. You know, for the most part, the market was relatively calm today. There wasn't a whole lot going on. You know, if we look at the S&P on somewhat of a faster time frame, not a whole lot going on for the S&P, just a lot of back and forth. Now we are again towards the mid-morning to kind of early afternoon session catching a rally to the upside. But man alive, this was really, really slow for a very long period of time. And even with this bullish breakout to the upside, you know, looking at something like a 5-minute chart, I can't look at this and say, yeah, man, this thing looks awesome for a bull trend, because this is the way that the day started, right? I mean, look at this thing. So any breakout above this, I don't really believe, at least not in the initial breakout. So I'm looking at this thinking, okay, well, you know, we have a situation that we might be able to measure something up. We can use this overall range low to range high and give us an area of interest. Not only a 618 deviation, which is what we're sitting on top of right now, but potentially even further up towards a full deviation, which is at 2691.5. And that's the big objective that I think a lot of traders will be waiting for on a range breakout to the upside. So we do still have some upside potential left, but I am looking at resistance at 2691.5 as the next zone to kind of keep our eyes on, just in case they want to get a little bit funny up there and shove the market back down on some faster time frames. But aside from that, overall, like I said, I mean, it's a pretty slow day today. There wasn't a whole lot going on. Had to really play it safe today if you wanted to stay on the right side of things. Lots of trade potential setups, but the problem was a lot of them setting up directly into support or resistance, and that made it really tough to find anything worthwhile. But aside from that, you know, we'll end it a little bit early because, again, we do have some company over and kids playing around and all that fun stuff. Don't want to get too noisy on the microphone. But, yeah, aside from that, you know, not too bad. As always, underneath the video here, make sure to click on the subscribe button so that you know every time we have a video or a launch or anything like that. And then, of course, click the little bell icon over to the right of that so you'll be notified every time we go live. We go live Monday through Thursday, every time at 1 p.m. Occasionally, we'll miss some here or there. Last week I was sick, so we missed Friday. Or, no, we missed Monday through Thursday. But, you know, for the most part, it's always at 1 p.m. every week, Monday through Thursday, so make sure to sign up so you don't miss any of those. Outside of that, though, as always, if you have any questions, you can send me an email. But like we always say, you know, it doesn't matter what market you're trading, even if it is really slow, make a plan, trade the plan, follow those rules, and you do just fine. Until next time, we'll see y'all then.